Good morning, everyone. Thank you so much, Praveen, for the wonderful introduction. And let me wish everyone a happy Independence Day. So before proceeding further, let me start with a small disclaimer. So in every session, we used to say this: whatever session we do, whatever topic we choose, our intention and objective is not to promote or not to sell any financial product to you. In a similar fashion, even for today also, we have come out with an interesting concept where we are not going to sell or promote any financial products. And whatever information you get from this session, please treat this as an information only and do not take any investment decisions. Before taking any such decision, please do consult your financial advisor or reach your mutual fund distributor. So let me start with a few quick facts before seeing what are those 8 mistakes, whether we are committing such mistakes or not. The first and important fact is that if the current monthly household expenses in a family is 30,000 rupees a month, after 20 years, do you know that at 7% inflation, it is going to cost you 1,16,000 rupees a month to just maintain a similar kind of lifestyle? Have you ever thought about this? And do you know, if you have a kid around of 70 years and whose higher education is costing 20 lakhs today, is going to cost you 42 lakh rupees after 11 years. Are we ready? So if you see the basic common expenses, if you see in a day-to-day life, have you ever thought that the petrol expenses for a liter, which we are paying 110 rupees today, we used to pay just 10 rupees 32 years back? Have you ever realized this? So in these years, if you see, the market has grown by 85 times. In 1990, Sensex was at 700 points. Today it has nearer to 60,000 points, which means the market grew by 85 times in 32 years. Have you ever noticed this? So with these few quick facts, let's see what are we going to discuss today. Build India. So educate investors, build India. So many of you might have questions in your mind. What is the relation between the Build India and today's investor education session? Yes, you will be quite surprised to know the relation between the Build India and the investor education program. These many days, people who wanted to serve the mother nation, we always wanted to see that if I want to serve the nation, I should be at the border, right? Or you have to be a public servant, right? No, you have another option to serve the mother nation in a different way. Let me tell you that. If you are an investor or if you are saving your hard-earned money in any of the financial products, be it a mutual fund, be it a fixed deposit, or be it an insurance policy. Let me give you an example. You're keeping 2 lakh rupees or 3 lakh rupees in bank fixed deposit. And most of us are aware that the money which is collected in the bank fixed deposit, this money is being lent to whoever are in need of money, be it for constructing their house, or be it for their kids' higher education, or be it for their retirement, or any such goals, be it for business loan as well. Means if someone is borrowing your hard-earned money from bank, that is going to help the society to grow directly. Say if you are an investor into a mutual fund scheme, whatever money which we deploy into a mutual fund scheme, that money will be directly invested into the stocks of our Indian economy, which means directly the companies are going to be the beneficiaries, which will help the organization to expand themselves so that the money will flow into the economy. So from this minute onwards, whenever you are investing into any of the financial products, you are helping our economy grow. So we should feel proud from this moment onwards whenever we are investing our hard-earned money. So with this note, let's see what are those 8 common mistakes. So knowingly or unknowingly, we have been investing our hard-earned money in some or the other financial products, right? And we have started our financial journey maybe 5 years back, maybe few years back, or maybe a decade back as well. But due course of this, we might have committed couple of mistakes or more mistakes as well, knowingly or unknowingly. If someone who were planning to start their financial journey to meet their future responsibilities, If you came to know these mistakes, then believe me, your wealth creation journey would be cake away. So let's see what are those 8 mistakes. The mistake number 1, investing without any financial goals. So before explaining this mistake and how it is going to impact our financial journey, let me ask you a quick question. Say, early in the morning, you wanted to travel somewhere. So you are not clear with that word called somewhere. So if you don't know where to travel, how you will travel then? What kind of vehicle you choose? Which vehicle is going to be apt for you? Is it a train, or is it a car, or is it a flight? So whenever you are not aware where you wanted to go, then you will not be knowing whatever transport mode of vehicle which we choose may fit or may not fit. Likewise, even in your investments, you have to have a proper target in your mind. Without having that financial destination in your mind, whatever financial product you choose looks like okay for you, looks like you're on a right path. You'll only come to know at the fag end of the goal. But this realization comes with a cost. So whenever you start your investment journey or your financial journey, remember, figuring out your financial target, figuring out your financial need will definitely going to help you to take a right investment decisions, and it will also help you to control your emotions to reach that financial target. So always remember, investing without any financial goal means you are going to destroy your wealth. And the second important and financial mistake is, we always taught that more risk, wherever we take more risk, we will get more profit, right? The flip side of this states, wherever there is more risk, there is more loss as well. So investing into any financial product without understanding your risk taking capacity, your risk ability, means you are taking a big mistake in your financial life. So let me give you an example here. Most of us take our investment decisions, or most of us does our investments based on our neighbors' views or our friends' advices or our boss recommendations, right? So always remember this, friends. Whenever we follow the others, maybe let me quote this example. Say, for your boss, investing a 5 lakh rupee in a mutual fund is not a big thing for him, may not be a big thing for him. If there is a loss of 1 lakh or 2 lakh to that investment overnight, may not hurt his finances in any manner. But just imagine, you have invested some 50,000 rupees today, and overnight your 50,000 has come down to 40,000 rupees. There is a 10,000 temporary erosion of your principal. Can you digest that? Or you have to lead a sleepless night? Just understand this concept before trying to imitate your friends or neighbors' investment ideas. So for this, you have to sit with your professional advisor who understands your risk profile and your risk taking capacity, and then invest according to his or her recommendations. So taking more risk doesn't mean that you are making only profit by taking more risk. Sometimes you also have to lose your money as well. And friends, if you are really feel like you're enjoying the session, or you're taking some valuable inputs from the session, we are giving live of this session on our Facebook page as well. We have posted that Facebook link on the chat window. If you feel really this kind of inputs are going to help your friends, neighbors, and in your network, kindly click the link and share it on your Facebook wall. That is going to help us, and as well as your kith and kin who were in this investment journey. So thanks for that. Another most interesting and an important mistake is, I don't understand. So investing into financial products without understanding the nitty-gritty of that financial product is always a problem in a peaceful or a stress-free financial journey. So what is going to happen if you invest into any product without understanding it? Say, let me give you an example. Let's take a cryptocurrency as an example. So people are behind that cryptocurrency, or people are behind some MLM schemes, multi-level marketing schemes, just for the sake of lucrative returns, right? So it is good that following a lucrative product which is giving good returns is good, but you also have to understand what is it making that product gives you more return, and what kind of risk inherent in that financial product, and how they were able to generate that return, and how are they going to how they are not going to make you good returns in that financial product. So always remember, if you don't understand why it is growing, how it is growing, when it is going to fall, how it is going to fall, then please keep them aside. Or you also have to understand, people sometimes suggest us that I have invested in XYZ product, so I made good money in that product, why can't you consider it? Then after listening to them, ideally we go for it and pick them, right? But always remember, just understanding the pros, the positives of the product is not sufficient. You also have to understand the negatives of that product. What the worst may happen in that financial product, and how is it going to impact your financial journey. So for that, you need to have an advisor who not only just gives you the positives of any financial product, he should also be knowledgeable to tell you the negatives of the financial product as well. So investing in a product which you don't understand means you are going to destroy your wealth. And then another most important mistakes we tend to do without knowingly. So timing the market. We all of us know that buying at low, selling at high is a great formula to make wealth, right? But is it really possible to identify the lows and highs of market? No, right? Can anyone answer in the chat window that can we identify the bottoms and ups of the market levels? Can someone respond? Okay, I could able to see only a couple of answers. Like, it is difficult to assess the market levels. Absolutely right. Here the biggest point is, whenever you wanted to invest at today's market level, we feel that maybe if I ask you to consider today's market level, say market is somewhere around 59,000 to 60,000 level. The Sensex level is around 59,000 to 60,000, right? So if I ask someone, they may feel like, Narendra, today these days the market seems very high, and I think investing a little at little lower level will make more money for me. Yes, investing at lower level than today's will definitely going to help us, but is it really possible to know when the market is going to the lower level? No, right? There is a common phenomena in every investor. If I ask them to invest at today's 60,000 level, they wanted to invest at a little lower level, maybe at 50,000 or 55,000, or maybe lower than that as well. But after a year or after a few months, if market moved up from 60,000 to 70,000 level, then if I ask them, so sir, can we invest now? Then again they think, Narendra, the markets were very costly now. Why can't we wait for another market correction? Or why can't we invest at 50,000 level? Or why can't we invest at 60,000 level or 65,000 level? This is a normal human cycle or emotion cycle which will be there with every one of us. So always remember, when to invest means whenever you have money to invest, that is the right time to invest. Over a period of 10 years or 15 years, today's market doesn't matter. Believe me. So, and I would like to recollect one famous quote quoted by the successful investor called Warren Buffett. He says, people lost more money in waiting for a correction than in a correction. I'm repeating for few of us, few people. People lost more money for waiting for a correction than in a correction. So it is quite impossible and difficult to identify the market level. So it is always recommended to identify your financial one and start your financial journey. And the next important and interesting financial mistake is lack of diversification. So what does it mean? We've been taught from our school days or in college days that we should not keep all eggs under one basket. Why? Because one spoiled egg is going to destroy the total eggs in the basket, right? Likewise, we should also invest our money into various financial assets. But do we know into which financial product we should invest? What percentage? Do you know how much percentage of money to be invested into an insurance policy? How much money to be invested into a equity mutual fund scheme? Or how much money to be invested into a gold deposit? No, right? So it is always advisable and recommended to sit with your financial advisor and to figure out your risk appetite and to figure out your allotment of your money, whether how much to invest into a mutual fund scheme, how much to be invested into a debt scheme, or how much to be invested into a gold deposit kind of schemes. So to avoid the sudden market corrections, or to safeguard your portfolio to the sudden market crashes, one need to follow asset allocation philosophy. Asset allocation is nothing but investing your investment into various assets. But it is always important to understand to which asset we need to allocate and how much percentage to be allocated to that particular asset. So from this minute onwards, if you're not diversifying your money into various financial products according to your needs, means you're going to destroy your wealth. The next important financial mistake, investing in what is hot. This is going to be a most connecting slide with many of us. If you observe in last 1-2 years during pandemic or after pandemic, many of us find some time to invest our hard-earned money into stock markets, right? And if I say, if you see the news, if you see the media, if you see the WhatsApp status of many people, everyone started recommending stocks like LIC, IPO, Zomato, Paytm, IRCTC, LIC. So we've been hearing and we heard these buzzwords, right? So always remember, do not invest whenever or wherever there is a buzz. So having a buzz doesn't mean that you're losing something if you do not participate. And we have observed during our last 15 years of experience that most of our customers come back to us and state this statement. Sir, few of my friends have participated in a Paytm IPO and they were asking me to invest to a little extent. So is it okay to participate? Then we generally ask this question. So do you want to invest because your friends have invested into that Paytm? Or do you think there is a value available in the Paytm IPO? And friends, we are not recommending any stock and we are not against to any financial product. We are just using these examples to make you understand what not to be done during your financial journey. So every one of us know the story of these IPOs, be it Zomato, be it Paytm, be it IRCTC, be it XYZ. So always remember, do not invest what is hot. Always remember to understand whether that product is going to suit your financial needs or not. Okay. And the other most important mistake most of us does is bias. Bias is nothing but belief system we have. So due to the time limitation, I'm not going to explain you each and every bias which is shown on the screen. I'll be taking a couple of biases to help you understand how our decision making is being carried away, or how our decision making is being influenced by our information. So let me explain you this first bias called confirmation bias. So confirmation bias is a bias. A confirmation belief is a belief. Say you have read a newspaper article stating that XYZ stock is going to reach 2x or 3x in next 2 to 3 years time. Then some confirmation will come to your brain stating that if anyone who buy that stock, they're going to make 2 times or 3 times money in next 2 to 3 years. So without extending your research or without getting into further details or without much research, we generally take the investment decisions. So sometimes that may hit, sometimes that may not give you the appropriate result. So always remember, do not just take the news or the information which is available in the market and take your investment decisions. And let me give you another example. Another bias called loss aversion bias. Say someone have invested into stock market before pandemic. Maybe every one of us know during pandemic market corrected by 40-50%, right? So after this correction, your money was eroded to the same extent, or in some investments or some instruments it has eroded a little more as well, right? So what happens to the person who have invested just before the pandemic for the first time and have seen this correction? So some mindset will come to their mind, some thoughts will come to their mind that whoever invests into stock market are not going to make money. They are going to lose money in the stock market, and they try to avoid investing into equity related instruments for their lifetime. So then what will happen if they avoid these investments based on the belief systems they have? Say they may restrict themselves to a guaranteed product, or they may restrict themselves to bank fixed deposit or postal deposits. So what's going to happen to them if they restrict themselves to these kind of products? As every one of us know, the bank deposits or the postal deposits or the traditional insurance policies cannot give you more than 5 to 6% or sometimes 6 to 7% return, which means it is not going to beat even inflation. So what will happen if it is not going to beat inflation? Your hard-earned money is not going to grow to the extent it has to grow so that you can lead a better financial life. So your investment decisions should always be supported by your financial advisor recommendations. So just with the information available in the market, do not take any decisions or do not come to any conclusions without consulting any professional person. Okay, and we have come to the almost end of today's topic. Last and the most important financial mistake is lack of financial literacy. Whenever we hear these words called budget, finance, savings, expenses, most of us will get worried, right? We don't understand what to do, how to manage these finances. Even maybe in the starting of the month you will receive salary. Maybe by the time we reach 7th or 10th of the month, many of us struggle to manage the rest of 20-25 days, right? So it is all because that we are poor in financial management. So we always say this. We as an Indians, we know the importance of earning money, and we know how to earn money, and we also know how to get a secured job or a secured work, right? But we are poor in managing our finances. We are good at money earning skills, but are we to the same extent, are we good at managing our finances? Maybe no, right? In most of our cases, it is always important to spend some quality time to enhance your financial knowledge, your financial literacy. For that, at least we request or we suggest you to spend at least 1 hour a month. Is it difficult to spend 1 hour a month to educate yourself so that you can take better financial decisions? No, right? So maybe I have another hack. People who think it is difficult to spend at least even 1 hour to educate themselves. For you people, we have come out with a solution called every month first Sunday, we are coming out with a financial literacy session. A session on financial literacy with a different topic and a unique approach. What an investor should be aware of in a particular financial product, and what an investor shouldn't do to reach his financial destination. So mark this statement: every month first Sunday, whether you receive an invitation or whether you miss the invitation, you can get that information about our future sessions and our current sessions on our Facebook page with a tag called Manavi Wealth. So you can get the data about our sessions by joining our Facebook page. So coming back to the topic, having financial literacy is the key for many of the having a proper financial literacy will definitely help you not to commit any financial mistakes, so that not committing mistake itself is a great thing in wealth creation. So let's quickly rewind. What are those 8 mistakes that can destroy our wealth? Investing without any financial goals. So the hack is you have to identify a proper financial goal. You need to identify the financial goals appropriately, and then you have to start your investment journey. Taking more risk than you can afford. So you always have to remember the flip side of the statement. Taking more risk not only gives you more return, it also can lead to more losses as well. So understand the risk-taking capacity of one's, and then choose a financial product to start your financial journey. Investing in financial product that you do not understand, whatever the financial product is, if it is hard for you to understand, it is hard for you to digest how it is delivering return, then do not invest into those, or at least consult a professional guy who can explain you the nitty-gritties of the financial product, and then you can come to a conclusion. And the biggest sin in the investment is timing the markets. Do not do that. Why? Because it is next to impossible to predict the market movements. The few other mistakes we have studied are lack of diversification. You should also understand how much money to be deployed into mutual fund, how much money to be routed to an insurance policy, how much to be invested into a gold deposit scheme. So diversification is a key for a peaceful financial long-term journey. And investing in what is hot. Never ever invest into hot products or buzz. Why? Because you have to remember a famous quote: be fearful when others are greedy, and be greedy when others are fearful. Whenever you heard about one particular thing everywhere, so be so cautious. And decisions influenced by behavioral biases. Let your beliefs do not influence your emotions or influence your investment decisions. Do consult an advisor before understanding those biases, or before taking conclusions or coming to conclusions after that biases. And last but not least, financial literacy. Financial literacy is key, at least to help yourself in taking better financial decisions, and or at least in helping your next generations not to commit the mistakes what we have done because of that illiteracy into finances. So, sir, you have taught us many mistakes and we've understood to certain extent, but do we have any other solutions to safeguard ourselves or our family members or our neighbors from these mistakes? Yes, we do have a solution, and the solution is having a right person besides you. What is he going to do? And for that, we say generally, Saradi Zeruri Hai, or an advisor Zeruri Hai. There is a need for a financial advisor, because an advisor is a person who will help you to understand the nitty-gritty of each and every financial product, and he will also help you to understand the risk appetite of you, or he will also does some scientific calculations of your risk profile or your risk appetite, and then he's going to recommend which product is good for you or which product is not suitable for you. So here, why? Because there is no single solution for not committing these mistakes. Is there were many of us who have different lifestyle, who have different income levels, and who have different financial targets, right? So your target may not match with the other one's target, and your risk appetite cannot be matched or correlated with some other's risk appetite, right? So for that, if you can take out your time for 20 to 30 minutes you can connect with any of our team members so that we can help you to understand the few more financial mistakes one shouldn't do. And if you want to review your current investment methods or your investment ideas, you can contact us personally, or you can connect with your financial advisor as well. And it's the time for action, and we are posting you a Google form link for having a one-to-one appointment with us. Usually we do charge for taking the appointments of our customers individually. Since we are doing this on the Independence Day, we want this literacy to be taken across the marketplaces. So we are going to do a free one-to-one session to the people who wanted to really understand where they stand in terms of their financial journey. So if you're really interested and if you're serious to check yourself, you can fill